What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring to all of you this evening. So what we're going to be talking about in this update is, again, a little bit of the technicals and what we're seeing on some of the longer time frames, like we always do, and a very important lesson for a lot of you guys that are looking to get into AMC options. Now, in addition to this, we do have to take a look at the Ortex data for AMC and GME, but there are some very, very interesting things occurring with ETFs that are holding AMC and GME at the current time. One of them has over 400% short interest right now, which we are going to be breaking down exactly what this is, some possible explanations for this, and why those explanations might be a load of nonsense. Now, in addition to this, we also have another hedge fund that is facing very, very significant losses. Again, like we've been saying, all of the hedge funds that we've seen so far, Tiger Global, Melvin Capital, the issues that Allianz has had, are not the first and only ones this is going to be happening to. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, if you do want to get grandfathered into the 1348 Discord with all of the new things that we have coming, options data, real-time options data, and unusual options data is going to be coming soon. Over 40 private live streams every single month. All of the alerts, the full layout of the trading curriculum. Make sure you check out that link down below. We're also going to be unveiling all these new algorithms to you guys soon. Our first one already having a lot of success. So AMC closed the day today at $12.79, down about 73 cents or 5.4%. Absolutely not the day that we wanted to see. But again, as we've been talking about in a lot of these videos, we are going to be receiving the CPI data, basically the inflation data, coming out tomorrow at 8:30 a.m. Eastern. And that's kind of driving the market over these last 2 days. We are seeing the market trying to price in a high CPI print. Now, when we take a look at the 4-hour for AMC, there's a very important lesson here that I want you guys to fully understand if you are with us trading 1348. This is one of the very specific rules here. Yes, we did see the MACD looking good here. Yes, we did see this 1348 crossover right here as well. But we didn't see any confirmation candles and any momentum above this 200 EMA. It was looking like it could have gotten up there, but it never did. That's why I say I like to wait for these confirmation candles up here before we start to see that additional move to the upside. Very similar to what we saw back here. It didn't necessarily happen right here, but again, the longer term trend is going to be your friend. Now, when we take a look at AMC's Ortex data over here, let me give this a little bit of a quick refresh. So we've got 24.06% estimated short interest, but down here, the release date, we did get new exchange reported short interest data today, 21.31%. And Ortex did overestimate AMC short interest on this day of May 31st. So it's very possible that we see the estimated short interest come down. That doesn't mean that there's covering going on. It just means Ortex needs to rearrange its data. Still super high cost to borrow on AMC here as well. 29.97% on the average, 48.18% on the max, with an additional 5.21 million net borrow of shares today, most likely going to send the shares on loan tomorrow over 190 million, another wild all-time high that we have never seen on AMC. Now, coming over to GameStop very quickly, about 25% estimated short interest. Again, we got the exchange reported data, 24.65% on the estimate. Ortex was estimating about 28% on May 31st right here. So again, I would not be surprised if we saw these estimates slowly start to come down. Now, I do want to get into this situation with some of these ETFs that have crazy high amounts of short interest right now. So this one, XRT right here. So what we're looking at here is estimated short interest of 443%. Now, you might be thinking, well, this could be a little bit of an Ortex glitch here, but if you look at the short percentage, according to the exchange, you're seeing consistent, wildly high amounts of short interest as reported by the exchange. Now, when we take a look over here, GameStop is the number one holding of a weight of 1.6% of XRT, this ETF. So a lot of people have come out with a potential explanation for this in the past, and we see this NASDAQ article right here. In fact, as of the latest data, it's 626% short This is an article from back in 2011 that talks about XRT short interest. So this has been going on for a very, very long period of time, a number that borders on mythological, but it's actually not so unusual for ETFs. Not necessarily the case, where creation, redemption, and settlement timing mismatches can create seemingly impossible data like that. That's true if this data was kind of getting manipulated and you were seeing a weird settlement period or redemption or creation, something weird was going on, okay, that could make some sense. But what you wouldn't see is persistent fails to deliver. And we come back over here to XRT, you can see that it was on the threshold list with a very high amount in persistent failures to deliver from December 13th of 2021 all the way up until recently, May 30th, 2022. That was the amount of time that it was on the threshold securities list. That is a wild amount of time for shares to be failing to deliver on an ETF. So GameStop, this ETF right here, has wild amounts of short interest. Now, when we take a look at IWM, the Russell 2000, AMC is the largest holding of IWM right here, and this has 45.25% estimated short interest here, and the exchange came out at 40.58%. So these ETFs that are holding not a majority of their holdings in AMC or GME, but the top holdings in AMC or GME are wildly shorted at the current time. The other key thing that I want you guys to think about here is that we've gone over this in the past, but you can think of these ETFs as kind of like a pizza pie, where every single stock position that they have makes up a little sliver of that pie. When you short the entire pie, that is not going to show up on the short interest reports for any of those individual stocks. But what these institutions can do, even though it is very monotonous to do so, you can short the entire ETF and in the correct proportions buy all of the other stocks in that ETF. So you are technically only net short through the ETF, the one stock that you want to be. There are many ways that they can do this, but that is one of the ways that they are using these ETFs to get that indirect short exposure on the stocks that we are talking about on a day-to-day basis. So that is going to be kind of that portion of the video right here where we talk about that crazy high short interest. Now I want to briefly go over this hedge fund that is facing very significant losses. Now, when we come over here, hybrid hedge fund D1 is down nearly 23% year to date. Dan Sudheim's D1 Capital Partners, a hybrid hedge fund that bets on both public and private companies, is down 22.5% so far in 2022. According to a report by Bloomberg, the fund's biggest share class, which invests half its assets in equities and the rest in startups, lost 4% last month, with its portfolio of stocks falling 13%. According to to unnamed sources quoted in the report, D1's public market portfolio has fallen 44% so far this year, while its book of closely held companies is down by 8%. Now, there's a couple of key points that we need to make here, but the one thing that I kind of want to bring up is that these people at these large institutions are supposed to be very intelligent and very in tune with what is going on in the overall markets. Me, 23-year-old college graduate, can see that the markets are probably not in a great spot right now. But this guy who is running large amounts of money for a lot of these institutions is down 23% year to date because they were not able to position themselves accordingly. Now, this is not saying that I am better than them. It's just saying that these are the people that are receiving billions of dollars in capital to deploy and invest in a lot of these different companies. This is not the way it should be. All of these funds right now, we know this, they struggle to beat the S&P every single year. So why wouldn't these large, high net worth individuals just throw their market in one of these indexes and not mess around with these people who are obviously not going to take care of their financial interests? So again, that's something that makes me a little bit frustrated by a lot of these funds that are making all of these fees on a lot of this money that they're taking in, but they suck at performance every single year. So that is going to wrap up this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next video.